Hello everyone, this is your host Vaibhav. A very good morning, good afternoon, and good evening to the viewers from around the world, depending on which corner of the world you live. You might be in the you might be experiencing the morning sunrise, the hot sun of the noon, or maybe it's time for the sun to set in the evening. In today's session of Daily Stock, we are going to take a look on the quarterly report for the first quarter of fiscal year 2024 of the Morgan Stanley, which is one of the largest financial services firms in the world. It has presence in around 42 countries spread across the world, and it offers services to individuals, to governments, to organizations, to NGOs, and all sorts of people looking for the investment and wealth management services. It has been doing quite well in the recent quarter. The last quarter, the first quarter of this year, was quite good for the company, both from the point of view of its earnings as well as the stock price performance. Both of these have been on the rise. So we will see if there are emerging opportunities for us to trade and invest profitably in this environment. For that, we have to consider its fundamentals as well as the technical aspects. If we take a close look on the consolidated income statement of the firm, you will see that the revenues have shown a healthy growth sequentially as well as annually. There was one time FDIC related charge last quarter, and that had impacted the earnings of many of the US based financial services company. But now most of these major banks and financial institutions in the US are reporting the earnings, the net profits closer to the prior quarter's numbers. For the Morgan Stanley, the revenues are greater than what they were a quarter back as well as a year back. So if we do this comparative analysis, you can see that the revenues for the quarter ended March 31st, 2024 are at US dollar 15.13 billion, which is a growth of 17 percentage point in comparison to the prior quarter's revenues of US dollar 12.89 billion. And if we go back in time and take a look on the revenues for the first quarter of fiscal year 2023, even in comparison, so the revenues are growing. All three key segments for the company, the investment banking, the wealth management business, the asset management business, and trading revenues have shown increase, and that had propelled its total net revenues for the last quarter on the higher ground. At the same time, the company maintained and to some extent improved on its efficiency. So we have these revenue growth accompanied by the growth in net incomes available to the shareholders of the firm. We have now the net income at US dollar 3.46 billion, which is quite a lot of growth in comparison to the prior quarter's numbers. But if we go a year back, even on the higher base of first quarter of 2023, there is a growth of around 15 percentage point. So we have this growth in the net income available to the shareholders both sequentially as well as annually. Sequentially, this figure is not higher simply because, as I said earlier, also there was a one-time FDIC related charge on the net income of many of these financial firms, and that had resulted in these numbers being quite lower for the last quarter. But now we are seeing these net income numbers closer to the average figures for the financial firms. What this indicates is that the company is gaining ground in terms of its market share, in terms of the value proposition offered to the clients. As a result of that, its revenues have shown increase, and at the same time, it has been able to keep the cost of business in check and to some extent add to the efficient management of the firm's expenses, and that has resulted in lot better net income figures for this time around. And if it continues like this in the second half of this year as well, we will see its total income, total revenues for the year overshooting by a wide margin the earnings and the revenues of the fiscal year 2023. So we have the possibility of its stock price continuing to do well in the latter part of this year also, and that opens up the possibility of profiting from this expected growth, because we can then keep looking for the opportunities to trade and invest in the stock of Morgan Stanley. If we see its balance sheet, the firm is on solid footing in most of the financial metrics as well. Here, let me check if we have its balance sheet with us or not. I think it's available in the supplementary information. I was also looking at its cash flow statement, which is not really included in it in this report. The cash flows have been solid. It has been able to increase its operational cash flows, and that has resulted in better liquidity at the firm. Here we have this consolidated financial summary with a segment-wise breakup of the revenues. We have these revenues coming in from the different segments. The institutional securities have also shown a remarkable growth both sequentially as well as annually. There is growth, though not much, but still there is growth in the wealth management business as well, and the investment management is not really far behind. There is slight decline in sequential terms, in quarter-on-quarter terms, but in year-on-year terms, there is growth in the investment management as well. So all these things are pointing to the betterment of the business. Even though the macroeconomic environment remains challenging, the company has been able to maintain a firm grip on its clients and offer a value proposition which not many people have been able to resist. And as a result of that, they have been flocking to the Morgan Stanley for managing their wealth investments, etc. Is the balance sheet. There has been growth in the total assets of the company. The liquidity resources have also grown sequentially in annual terms. We also have this breakup of its revenue analyze and profit from its stock movements. Since the release of its earnings report, we have seen that the stock has been on upward trajectory. We got its earnings report on 16th of April, and since then the trajectory has been upward for the Morgan Stanley stock. Prior to the release, it was trading close to $87 mark. Now there is almost a 10 percentage point growth from that level, and even on these elevated levels, I feel that there is still room for it to run higher, and we can adopt a buy on dips approach to profit from that possibility. If we consider the short term trajectory of the Morgan Stanley, it has been consolidating with upward bias. On the first of this month, it was at the price level close to $90 per share, and from there on, in no time, in last couple of sessions, it has gained around 5 percentage point, and even in yesterday's session, it was going strong. Overall, the trajectory is of higher highs and higher lows. So that simply means we have to watch for recent highs and lows. And if we see that after correction, it is able to hold above the prior low while giving us the opportunity for us to invest. I think we do stand to profit from this Morgan Stanley's expected rise. So for next trade or investment decision, if your view is simply for a couple of sessions, I think the price level to watch out for is going to be its recent swing low of around 90. If it doesn't really decline below that in the next correction, and after correction if it consolidates above this level, we can indeed take our chances, and after due consolidation, if it starts to show the signs of some upward movement, we can indeed jump in and go for a newer long trade. So that's the view from the short term perspective, valid for a couple of sessions. And if we have to expand the time horizon, we can make the candlestick time period to day, and here we get a wider picture. And the wider picture is not really much different since the October 2023. It has been on a upward trajectory, and for the better part of this year, it has been consolidating in this range of $83 to $94. And in the month of April, there was a sharp dip on the lower side, but it was contained above this prior low. So we have this formation of higher highs and higher lows in place for the Morgan Stanley on the medium term trajectory as well. So as long as its medium term trajectory holds, I think we do stand a chance to profit from these momentum, which is bullish, which is looking bullish on the medium term. So for next couple of weeks, I feel if there is correction from the current highs, recent highs, because at the moment the Morgan Stanley stock is sitting at its recent swing high, so we don't really have much room on the higher side if it simply goes into a consolidation phase and doesn't really go anywhere. But if it rises, of course, we stand to profit. But if it doesn't, but simply consolidates with the bullish bias, in that situation, we won't be profiting. So, factoring in that possibility, we do want to take a cautious approach, and that simply means we will have to wait for some correction from the current levels. Maybe last week's correction closer to 90 was behind us. So what we can do is wait for newer correction, and if the next correction is contained within the prior swing low of $84, we can take our chances after the consolidation, at least a couple of days of consolidation after making a newer swing low. And if it holds the ground and doesn't really make a new swing low, we can go for a newer long trade with the view of a couple of weeks, with the possibility of it even inching towards $800 mark in coming weeks. So keeping above these prior decline, and then we can keep looking for the opportunity to trade and invest after the consolidation, and can profit in the eventuality of the Morgan Stanley again rising back towards these recent swing highs of 94 or above that. So that is a strong possibility. Now expanding our gains further to long term while making these candlestick formation of weekly. On the weekly time frame, the recent highs have been acting as a strong resistance zone. We have seen that on couple of occasions the Morgan Stanley has found the price level around 100 to 95, a strong resistance to cross, and it hasn't really been able to cross past these hurdle. But this time around, if you see, it is trading slightly higher. But of course, it is too early to say if it is going to be a clear break or no. So on the long term, I would say the caution is warranted. We can't really jump in at the moment. We will have to take a cautious view here, cautious approach here. Maybe it is better to not do anything at the current juncture in the Morgan Stanley stock from the long term view. If there is clear cut break and fresh swing high formation above these recent swing highs, and then after this high is formed, we can wait for a newer swing low, which needs to be above the prior swing low. So in that case, we can indeed take our chances with the expectation of this being a reversal from bearish consolidation to bullish consolidation. But it's too early to say, and we need to be cautious here. So from long term perspective, I think we need to give it more time. Maybe after a couple of months, we will have a much more clearer picture, and then we can take our chances for newer trading and investment opportunities from the long term perspective. So that's all from my side for today's session of Daily Stock, in which we consider the Morgan Stanley's quarterly report from the short term, from the medium term, as well as from the long term perspective. And we have seen what we can do in terms of profiting from the expected moves. So that's all from my side for today's session. Now it's time for me to sign off for the day. See you next time around with an equally interesting stock to work with. Till then, have a fabulous day ahead.